Are you wondering how to live off your investments? Isn't that the ultimate financial independence that everyone is wanting to achieve with their money? In this video, I'll be sharing with you 3 methods to live off your investment. Hi, I'm Camille Gaines, author of Earn, Grow, Give, a personal finance book, and I've been personally investing for over 30 years. Here I share what I've learned on that journey. Are you ready to live off of your investments? Or are you wondering how do you live off your investments? In this video, I'm going to be sharing with you the 3 methods that you can do that. And in the end of this video, I'll tell you what method we're using right now, and it is my very favorite method. So there are a couple things I want to share with you. First of all, on my website, I'm posting a longer article about this, and I've sprinkled in some investor alerts in there. And those are things that I want to mention that I think are important for you to know that are related to this topic, that are more related to risk and just sort of an alert to be aware of this. But I don't want to go into too much detail in this video, make it too long. So be sure to head over to my website and read the article. I'll put the link in the description below so that you can see the investor alerts. Okay, having said that, there are a couple of other things I want to mention about living off your investments. Because living off your investments, financial freedom, the whole thing about financial independence, retire early, leave your job, and all that is so popular now. So I want to mention a couple of assumptions that I'm making in presenting this information, or maybe not assumptions, but just things that you'll want to think about, considerations, I should say. And the very first one is that in talking about this, you have an emergency fund to cover emergencies that come up in your life. This is what we'll be talking about here, is how you're going to live off your investments to cover your monthly living expenses. So number one is you've got a nice emergency fund for those expenses that come up that we never expect, right? And the other thing I want to mention is that I'm not addressing inflation in this video at all. I've done another complete video about inflation. I'll put a link to that video in the description area, so be sure to check that out. Inflation is super important. Having said that, let me share with you the 3 ways, or the 3 methods that you can live off of your investments. The very first way, and let me just first say, okay, that it's basically you're going to spend your money. You're going to spend the money that your investments make for you, or you're going to combine the 2 methods. That's basically what it boils down to. Now, let me explain it with using a little bit of financial lingo. And here we go. The very first method is the spending your money method, also known as the investment withdrawal strategy. So with this method, you may have seen my other video where I talk a little bit more about this. There are ways that you can withdraw your money from your investment accounts. All sorts of research and data has been done to show how much you can withdraw without running out of money. But a very common method is the 4% withdrawal method. Since the 4% withdrawal method, another method came out that's a little bit less. It's around 2-3%. And it is sort of a result of the financial crisis that we had in the 2000s decade, with that first decade that had those 2 bad bear markets. And then it was sort of like, whoa, let's make sure that if people withdraw 4%, they can actually live off their investments. Let's lower this. So there's more research, and I won't go into, that's not the topic of this video, but just know that there are several different strategies that have been researched for having enough money to live off of. There's another one that's something like 25 times your annual living expenses. So there's more detail on that. But just be aware that there are ways that you can live off of your investments using this investment withdrawal strategy. Now, this investment withdrawal strategy assumes several things. It assumes that your investments are going to grow over time while you own them. It assumes that in most years, your investments are going to grow by more than the amount that you take out. And it assumes that you'll have enough money, that the math works, and you'll have enough money to live for the rest of your life off of this equation that's been calculated, this strategy that's been calculated. So the good thing about it, I'll tell you the good thing, and then I'll tell you the reasons I don't like it so much. The reason it's great is it's so simple. I mean, if you have enough money, it's great. If you have accumulated enough wealth, and you don't have to worry about anything, it's not important for you to leave a legacy or to care for family members after you leave. There's no obligation financially when you leave this earth. Then this is ideal. All you do is spend your money, right? You withdraw a certain amount and that's it. So it's really, really simple. The reasons I don't like it so much, the investment withdrawal strategy so much, is because number one, you will probably have to sell some of your securities, your stocks or your bonds, when the markets are in major corrections or bear markets, as we say, those big drops. And there's a good chance that you're going to be selling those investments at a loss. And so that's one thing I don't like about it, because bear markets last for a year or two. The longest lasted, I believe it was 2.8 years, and that was the one in the 1930s. So around 1930. So that is a long time. And so at some point in time, if you live for several decades, there's a good chance that you're going to have to sell some of your securities while the bear market is going on, and the price, if it's not less than what you pay for it, it's gone down quite a lot. So that's number one, caveat number one around this strategy. Caveat number two, or thing I don't like about it number two, is that it fuels scarcity and lack, right? Our whole lives, we're told that we should save our money and invest it. Don't spend that investment money, right? And no matter how much money you have, it really feels kind of guilty or negative to go take that money out of your investment account to go take a trip or do something great that you've really looked forward to doing. So I think that, while mindset is not huge, I'm not real woo-woo. I'm action oriented. I also think that the way that we've been brought up and the way we think in our minds, we've been conditioned to believe, it affects our actions. And so I can't help but feel like there's going to be some negativity around enjoying that money. And that's what our money is here for, right? To enjoy it. And so that's number two. Number three is the economy, politics, financial markets. All things out of your control can derail your plan. And I don't like that. That feels scary to me. So those are big factors. And the fourth reason I don't like it is because, well, it may not work. You might run out of money, right? And so there is that. All right, let me say that if you do choose to use the withdrawal strategy, that you personally make sure it's working. Don't take the advice of anybody, any wealth manager, financial advisor, financial planner. Sure, work with them, but show me the numbers, show me the math. Let's look at a calculator. Help me understand this. Make sure it's working for you if you're planning on using this method. All right, that's method number one, spend your money. Method number two for living off investments is the income stream method. With this method, the money that you've accumulated or put aside, your investments, are a little more focused on assets that generate income versus assets that appreciate in value or grow over time. I've done other videos on understanding the importance, the difference of these two reasons for investing, I call it. So with the income method, you're more focused on investing in things that are going to pay you rather than increase in value. Now, having said that, investments that you make to pay you income can also really increase in value big time, right? Especially following a big bad bear market when everything is super cheap and you put some money into the market or real estate market or stock market or sometimes even the bond market when it's been beat up. So you can absolutely see an increase in value in that money. But the overall focus of your investing is more about income versus capital appreciation or growth in the value of your account. Ideally, you're not going to make any withdrawals from your capital with this method. And for that reason, I love this method. I like the thought of not depleting my capital. So that's kind of the ideal scenario with that. The great thing is, you kind of got your money there as a backup should you need extra income to live off of if something happens and it doesn't work out. So that is one, sort of great thing about this strategy. Now, let me give you a simple example of this, and really an overly simple example. Let's say that you've got $2 million and you've got it invested in stocks and bonds, and let's say it's not in the S&P 500 index, which is not yielding a whole lot now. It's yielding around 2%, a little bit less. Let's say that it's yielding around some higher yield stocks, maybe 4 or 5%, and some bonds that are longer term. And I've got an investor alert with this article. I want you to read about long-term bonds. But anyway, so let's say, I won't digress, let's say that you're earning about 4% on your stock and bond portfolio. And so on $2 million, that's about $80,000 a year, and that's about $6,700 a month. So if that pays all your bills, then great, you're set. That's all you have to do. You've got this great, totally passive income, right, coming from your stocks and bonds, and your expenses are covered. You don't need to do anything else with that. And so that's the perfect example of method number 2, which is living off of the income that your investments generate for you. Now, here is what is missing from the traditional sort of retirement planning, for lack of a better word, that we see now, that's traditional. It's been around for decades. And that is that this method, this income method, is based solely on stocks and bonds most of the time. Most financial professionals, that's the world they live in. They're thinking stocks and bonds, whether that's a financial advisor or wealth manager. They're thinking stocks and bonds. That's what they know. That's what they do. What's great about this is you can enhance this method significantly by adding non-stock investments such as small business or real estate to your portfolio so that you can increase your return, but also usually lower your taxes as well. And so when you enhance this method with those more alternative investments, you can really, you can diversify, and you can have a lot more upside and possibility, because those assets that you own to generate income, such as real estate, rental real estate, for example, especially when purchased correctly, can appreciate significantly in value over time. Not only that, I'm seeing online businesses, bloggers, and small home-based online businesses that are being sold in the millions of dollars. So they generate the income, and they also provide that upside potential. So I just love this plan because it is all-encompassing. So that's method number 2, is you invest in things that generate income for you, and you live solely off of that income. You don't touch your capital, preferably, and that's how that method works. I do want to mention one thing, so you really understand this in your investment account. You know how you get dividends or from your stocks, or you get interest from your bonds, and if you have that invested in funds, usually the option that is sort of suggested is that you reinvest that money into more stocks and or bonds. Well, with this method, the income method, you would change that. You would say, no, I'm going to keep that money to live on. I'm going to use that money, rather, to live on. So you might have it go into a separate account, but you wouldn't reinvest it. You actually take that money to live on. And that is not long-term return or appreciation. That is the dividends or the interest that you're getting from your stocks and bonds, possibly enhanced with small business and real estate. All right, method number 3 is simply a combination of those two methods. You've got your withdrawals that you're making, and you've got your income that you're generating from your investments. This is really a nice situation if you have enough assets that you can do this. and it allows you a lot of flexibility, and it also gives you a lot of diversification. I love diversification because it reduces risk. And if things are crazy in the financial markets, then you've got your own assets, your real estate or your small business or other things. So that's what I wanted to share with you in this video, is the 3 ways you can live off of your investments. Once you figure out how to live off your investments, you've really created financial freedom for yourself. And that's what this is all about. If you found this information helpful, be sure to give me a thumbs up below the video. I'll leave a link to the website with more details in this article and those super important investor alerts I want to make sure you're aware of. I appreciate your watching. Thank you.